Hi everyone. As we all discussed about in last class, we discussed about accountancy. In accountancy, we discussed about the golden rules of accounts. In the same way, we also discussed about the principles of personal account, real account, nominal account, and journal entries, and ledger posting, trial balance, and we also had a glance of subsidiary books. So today, let's go ahead with the problems in a journal entry. Okay, for all the transactions, we enter entries, which is known as a journal entry. As per the textbook which we follow, Telugu Academy textbook, page number 35, there is an example which has been given. So you can just refer that if you want, so that I'll just explain you about it. The transactions which have been incurred by a company, which Ganesh on 2019 March 1st, he has incurred transactions, which there are various transactions which have been incurred. For those transactions, we are doing an journal entries. So before going to that, we need to have a format for a journal entries. As I explained you, date, which is very important. Whenever you are entering a journal entry, date, the first column is date. Next is particulars. Next is LF, ledger folio. Next is debit amount, and other is credit amount. So this is the format that which we need to draw first. Once it has been done, then start entering the date. What is the date we incurred? The first transaction is 1st of March 2019. So what's the first transaction? Mr. Ganesh commenced a business with cash of rupees 90,000. So Mr. Ganesh commenced a business with cash of rupees 90,000, which is what is coming in. Cash is coming in. In what way? By a person who is a capital. So what is coming in here? Cash is coming in. Cash comes under which account? Real account. Debit what comes in, credit what goes out. So cash account debtor to Ganesh capital account. Cash account debtor to Ganesh capital account. 90,000 and 90,000. Once the entry is been entered, we need to close the narration. Being business commenced by an owner. Okay, towards capital. And narration would be closed. Is that clear? And what would be the next transaction? Next transaction, purchase of a computer for office use for cash 10,000. Purchase of computer for office use. What is coming in? Furniture is coming in. What is the furniture over here? Computer. Computer is coming in. Now what is going out? Cash is going out. So computer account debtor to cash account. Debit what comes in, credit what goes out. Same as it is. So computer is coming. So computer account debtor to cash account. How much is that? 10,000 rupees. So again, you need to write a narration and close it. Being computer purchased for office use. Being computer purchased for office use. So next date is 4th of March. Bought goods from Shankar for 8,000 rupees. Bought good from Shankar. So what is this? Whenever the name comes, just remember, whenever the name comes, it's a credit transaction. Okay? Whenever the name comes, it's a credit transaction. So what is coming in over here? Purchases. Whatever the goods you purchase, purchases is coming in. Purchases account debtor to Shankar account. Purchases account debtor to Shankar account. How much is that? 8,000. Note it that and write the narration. What will be the narration? Being purchased goods on credit. Okay? Being purchased goods on credit. And close it. So what will be the next transaction? Next transaction is 5th. Sold goods to Naresh for cash 12,000 rupees. Here what happened? The name has come. It's a credit transaction, but it's also mentioned cash in the transaction. So it's purely a cash transaction. Is that clear? So sold goods to Naresh. whenever you sell goods, what is coming in? Cash is coming in. So what are going out? What is going out? Sales. Sales. Goods are going out. So cash account debtor to sales account. Cash account debtor to sales account. 12,000 rupees cash is coming in by sales account. Why not? We can also mention goods. But we use whatever the business, what we do is a good. As per the economics, whatever the business we use for the trading purpose, we call it as a goods. So we use the goods for purchase, sales. Purchase returns, sales returns, which we all use this goods for that. So you need to mention whenever you purchase goods, you mention purchase. Whenever you sold goods, mention sales. Is that clear? So cash is coming in. Cash account debtor to sales account. Okay, it is 12,000 rupees. Next, 8th of March. Purchase goods for cash for 5,000 from Mr. Suresh. Purchase goods for cash. Whatever we are purchasing, that is coming in. What is going out? Cash is going out. So, purchases account debtor to cash account. Purchases account debtor to cash account. First write the date and next write the transaction. Next write the narration. Being goods purchased for cash. Being goods purchased for cash from Suresh. And next date is 11th. Next date is 11th of March. Paid for printing expenses. Paid for printing expenses. 900 rupees. So paid. Whenever you pay, cash is going out. What is coming in? The expense. The printing is coming in. Right? The printing expenses account debtor. Printing expenses account debtor to cash account. Cash is going out. Is that clear? Put the date in a date column. So printing expenses account debtor to cash account 900 rupees. Write the narration. Being printing expenses incurred and close the narration. Okay. Next. What is the next transaction? It's on 13th of March. Goods returned to Shankar on account of rupees 600. Goods returned. What is that? Whenever you bought goods, you purchased goods on credit, again those same goods you return to him. Is that clear? So what is coming in? Who is coming in over here? You had purchased good from Shankar. Whenever the name comes, it's a credit transaction. In the same way, the goods which are being purchased from him again returned to him, then his name is coming. So Shankar account debtor to purchase returns account, which has been purchased got returned. The purchases always shows the debit side. Purchase returns always shows the credit side. Is that clear? So purchases. So from whom we have been purchased, for them the goods are going out. So the name of the person, Shankar account debtor to purchase returns account. How much is that? 600 rupees. Is that clear? So next would be a 14th. What is 14th transaction? Cash sales. Rupees 18,000. Cash sales. What is a cash sales? We can't sell cash, right? So as I told earlier, purchases, sales, purchase returns, sales returns. These are the things that which we include goods. Whenever you purchase goods, whenever you sell goods, whenever you return goods, all this, the goods are that which we are doing business. In the same way, here cash sales. So what is coming in? Cash is coming in. What is going out? Sales. So cash account debtor to sales account. Cash account debtor to sales account. Being cash sales made for rupees 18,000 rupees. Is that clear? Next, wages paid for rupees 3,000 on 15th of March. Wages paid. So what is coming in? Wages comes under which account? Nominal account. Debit all expenses and losses. Credit all incomes and gains. Profit and loss account or a nominal account, right? So here what happened? Wages account debtor to cash account. Cash is going out. We are paying wages. We are paying salaries. What are wages? Wages are being paid. Salaries are paid for a employee. Wages are paid for a other class of employee. Is that clear? So that wages have been paid. So wages are expense. Debit all expenses and losses. Credit all incomes and gains. Remember the nominal account rule. So wages account debtor to cash account on 15th of March being wages paid. Okay. Next, what's the transaction? On 18th, paid to Shankar 3,400 on his account. Paid to Shankar. Paid to Shankar. What is coming in? Whenever you pay, his name is coming in. Right? Is that clear? Where is that? Paid to Shankar, 18th March. So Shankar account debtor to bank account. Paid in his account, right? So pay Shankar account debtor to bank account. Being paid Shankar supplier through his bank account. Is that clear? Next transaction is on 20th. Received from Mahesh on account of rupees 7,000. Received from Mahesh. What we received? Cash. We received. Received from Mahesh on account. Is mentioned very clearly on account. Means what is coming in? Bank is coming in. Bank account debtor to Mahesh account. Bank account debtor to Mahesh account. Being check received from Mahesh or being cash received from Mahesh. Anything would be fine. And next would be 23rd of March. Paid rent. Paid rent. What is going out? Cash is going out. What is coming in? Rent. Rent comes under nominal account. Debit all expenses and losses. Credit all incomes and gains. So rent account debtor to cash account. Rent account debtor to cash account. If it is paid through bank, then you need to tell rent account debtor to bank account. But it is paid through cash. So paid rent. He didn't mention it is. So either the way you can take it. So rent account debtor to cash account. Cash is going out. Is that clear? Fine. It is on 23rd. Next is 25th. Received commission 1,200 rupees. Received commission. Commissions always receive in cash most of the time, right? So received commission. What is coming in? Cash is coming in. So cash account debtor to commission account. Cash is coming in. So cash account debtor to commission account. Being commission received in cash. Next, 28th. Paid salaries 5,000 rupees. Paid salaries. So whenever you pay a salary, it's an expense. Salaries comes under again nominal account. So what is going out here? Cash is going out. Salaries account debtor to cash account. Whenever the salaries are paid in through bank, then salaries account debtor to bank account. But salaries are paid in cash over here. So salary account debtor to cash account, being salary paid. Is that clear? Next would be Ganesh, who was the proprietor who got money, the business capital. Ganesh, proprietor, taken 1,000 for his personal expenses. Very important. Personal expenses, whenever we draw from our own, for our own purpose, which we draw from the company, then it's called as a drawings. Okay? Drawings account debtor to purchases account. Suppose you have taken a goods for your personal use, the same would be there. Drawings account debtor to purchase of goods account, or drawings which we have been taken. Suppose I invested in a money, in the same money I taken for my personal use. So drawings account debtor to cash account. Suppose my nature of business is selling a cycle. So I just gifted the cycle to one of my friend for his personal use. So then what happens is like, it's for my drawing. So drawings account debtor to purchases account. From goods it will be reduced in that way. Is that clear? It's very important. And next would be goods taken to personal use. So here what happens, that 30th transaction, March 30th, Ganesh has taken 1,000 rupees for his personal use. So drawings account debtor to cash account. Here drawings is coming in, cash is going out. The same way, the other transaction, goods taken for his personal use. So my nature of business is selling of a cycle. Suppose my nature of business is selling a cycle. So I've taken one cycle for my personal use, for my household use. Then what happens? My purchase book got affected. So drawings account data to purchase of goods account, or drawings account data to purchase account, being purchase made through a personal use. This is what. This is which we have been entered all the transactions. Okay. All the entries for all these transactions which we have been entered with the narration. With this, we post them into ledger. Once the ledger we post, then we start balancing. Once the balancing is been done, then we prepare a trial balance. This is how the financial accounting would run. Is that clear? Any doubts? If you want any specific problem to be explained, we are always there for you all. Thank you so much. Good day. Bye.